Welcome back to the Dividend Diplomats YouTube channel, guys. You got your boys right there, Bert, the Hurt Locker, and Lanny, the DD guys. And we're talking to you about a stock that just dipped, and is it time to buy the dip?
Right now. Smash that subscribe button. Give this video a thumbs up. Holler at your boys. Help us get the subscriber count up. Come on, guys. It's been way too long. We need to get to 19. We need to get to 20,000. Let's freaking go. Help us help you on our journey to financial freedom.
Let's do the damn thing, guys. This stock dropped $20 in one day. It dropped 5.25% in one day. In fact, it is nearing their 52-week lows right now. But these Dividend Diplomat stock metrics, which focus on the price to earnings less than the S&P 500, two, dividend payout ratio less than 60%, three, a strong track record of growing dividends, and then we look at that dividend yield. The dividend metrics are starting to looking very right. And Bert, I'm sure you'll be saying, I'm looking and I'm liking.
That's right here. So let's talk about the company. They're in the massive agriculture sector. Chances are, if you ever driven those country roads, probably seen their vehicles, their things working in the crop fields. Lanny, who are we talking about
The
today?
Bertmobile.
Oh, the
No,
bird.
no, no, no.
No,
We're
no.
talking John Deere, ticker symbol DE, the green tractor, the John Deere green tractor, guys. What a company, what a stock. This stock has been huge in my portfolio. They're actually up 120% in the last 5 years.
Yeah, you
Um,
bought them before that rise too, right? You've had them for a long time.
it's been a good one. It's been a goodie. This is not a stock that we're looking to sell, to say the least.
Yeah, I love it. It's not one of those big six that you were looking to dump because they were losers in your portfolio.
Yeah, check out that video if you guys have them from last Thursday, please.
Yeah, let's do it. All right, so let's talk about John Deere. What happened? Obviously, if they dropped 5% in one day, that means something went amiss. So chances are it's earnings season. I'm gonna go on a limb and say, Lanny, they did not have the best quarterly earnings report. You want to hit them with the highlights?
Yeah, we'll hit them with the highlights. I like that, Bert. Thanks for the intro there. Yeah, quarter one sales for John Deere, 1.75 billion, down 200 million from last year's first quarter. So net income is down. Net income is down. Their forecast is now low as well.
Ooh.
Um, 7.5 billion they're forecasting, up to 7.75 billion. So not terrible.
Not terrible. I feel like that's just not as high of a number for sales as I would expect for John Deere. I don't know
No.
why. I feel like
And I think we have to correct it. It's net income.
net income. That okay. There we go. I don't know why I thought it's sales here. All right, so obviously the sales are dropped down, but still $7 billion in net income, Lanny. That's nothing here to sneeze about for a company either, right? Still a pretty substantial amount of net income.
It's not. And when I was going through the earnings release, the most promising thing I saw was that their cost of sales was tremendously going down as well year over year, from almost 8 billion in cost down to 7.2 billion in cost. I felt like that was a
Mhm.
substantial decrease.
Yeah.
They had modest increases in, selling and administration and general expenses. When I started peeling back the earnings release as well, though some segments were down, a lot of that was offset by the financial services revenue segment. So that was up quite a few hundred million. So they're seeing a lot of growth there.
All
Um,
right.
but but an EPS doesn't look too shabby either, considering that they've been buying back so many shares. Their share count's down actually about 20 million
Oh
from last
man.
year.
Yeah, so that's the key. The point I was gonna bring up. I'm very excited to see our screener, especially when we focus in on the payout ratio. Because if you see net income was down a little bit, you would expect, I guess, all eyes are gonna focus on that payout ratio. But to your point, if earnings are dropping, but management also reducing the share count, that's a great way to manage that EPS and that payout ratio, especially if management thinks the company is undervalued. Why not buy the stock if management itself thinks it's below what the market price should be?
Exactly, guys. Man, you
I
know,
know John Deere's back again on the
that
value.
tractor is just humming along. And
Yeah,
It,
that's what's interesting though. It's interesting. The financial services revenue is an interesting piece. If more people are financing, more people are leasing the tractors. I mean, the demand's still there. Just can the customers continue paying on it? And will people be able to afford their vehicles?
is the delinquency bug going to hit John Deere's job?
It all comes
You know,
back to the banking sector. That's the moral of the story here.
who's backing these loans?
Yeah.
At least the collateral is some pretty fine equipment there on these loans.
Yeah, let's see if they go to the financing school that ADM CFO went to and see what's going on there. All right, that's a joke. No accounting scandals here, everybody. We're just kidding. All right, so let's get them through
Get
this
to the
screen.
fact. Let's get
Yeah,
into the
yeah,
facts.
yeah. Facts here, not reckless speculation. They were down 5% in a day. So that means they might be looking pretty interesting in our stock screener here, Lanny. You want to kick us out here with that first metric?
Let's kick them off with the price to earnings ratio, guys. Trade at $364.66. Yes, there's three sixes in there. Not my favorite. And no, Bert, don't even make the comment.
No, no. All right. No Iron Maiden
20,
comments are going to be
yeah,
made here.
earnings 28.28 for the EPS on the year to date, which again just sounds very funny to say out loud.
You mean
Um,
it's basically 1.5 getting plots is what you're telling me.
you had to take it there, huh?
I did take it. We're not messing around today. So
You
there.
just had to take it.
So with the price of 364.66, EPS of 28.28, that gives you a PE ratio of 12.89. So probably less than half of the S&P 500.
Yeah, pretty low for John Deere as well. You don't really see them in this territory.
No.
But let's see, is that dividend safe? Because that when we get into that next metric after the payout ratio, you'll be pretty happy, I think.
I think
But
so.
yeah, they pay $5.88 a year or $1.47 a quarter. So 588 over 28.28 obviously is a nice payout ratio of only 21%.
Beautiful. And that's exactly what we were like alluding to, or we have been talking about this entire video. If you're going to see a slight decrease in net income, your first thing is, can they support the dividend with the earnings? And obviously, when you have a payout ratio of 20%, you got a long way for earnings to fall before you have to worry about the safety of that dividend.
Exactly. And Bert, what's that dividend growth look
Yes,
like?
it's just terrible. It's disgusting. It's only 14.5%. So yeah, it's fantastic, guys. I'm kidding. I'm just messing around today. It's 14.5%. That's excellent. One thing, much to your chagrin, Lanny, their dividend history hasn't been the world's most consistent. It's only 3+ years of increasing that dividend. But with that, Lanny, as you know, it's infuriating how sometimes they'll go a year without increasing their dividend. And I don't think I need to speak too much about that. Your frustration can tell us.
Sometimes I go a year. Huh, huh. No coffee, guys. Almost 7 weeks strong. But sometimes they don't increase the dividend in a year, but sometimes they increase the dividend 3 times in a year, which is exactly what John Deere did in 2023. They increased their dividend 3 different times. They came into 2022 with $1.20, and they entered 2024 with $1.47. So if you do the math, in that year alone, 22.5% overall increase. So you gotta love that.
Magnificent. That's what it's about. So let's see what their dividend yield is. So after those 3 increases, the dividends jumped up. Their yield is actually, for John Deere, in line with the market. The dividend yield is 1.61%, so right in line with the S&P 500.
So the question you have to ask yourself is, can John Deere outperform the S&P 500? Can they outperform them on dividend growth, which is usually around 7.5 to 8.5% on the growth rate on the S&P 500? Can John Deere outpace that? That's the question you have to ask yourself.
Well, they're not outpacing them in performance this year because they're down 9% year to date. They're down 9.5% over the last year. So they're not beating them on the market value front.
Not in the last 52 weeks, that's for sure. But they are
But
beating them in the last 5 years.
yeah, you're right. Absolutely right. You beat me to that one. I realized it as we're going through there. Lastly, we always like to look at their yield compared to their 5-year average yield, because if your current yield's above the average, could be a sign of undervaluation. That's exactly what's going on here with John Deere, everybody. Their current yield of 1.61% is above that 5-year average yield of 1.25%.
Guys, That's John Deere. We're going to summarize the metrics again here. 13 PE, 21% payout ratio. They do have their trend of the dividend is up. They might not have the years of growing dividends, but when they do it in full force, double digits all of the time. 1.6% yield. Now, I know on my court, it's hard to buy a stock that's pretty much quadrupled in share price since I've purchased that.
Hard.
First, whoa.
Yeah, happens to me all the time. So, all right. So
So
it's
I'm
hard
going
for
to
you
be
to do it, but the
watching
question,
that.
oh, I was going to say, are you doing it though?
I have been known to still do it on a few other positions that I was up quite a bit, but this one I'm going to say no, uh, just because it's just too far away from that original purchase price.
Me, I'm watching it, not running to buy it. I'm working on bolstering my own position. So
APD, yeah, that's
my
right.
APD, although APD just popped, they came
Uh,
back.
uh,
They're almost at 230 again. So I'm glad I at least grabbed 7 shares below 220. That's a story for a different video.
Guys, what are you doing about John Deere stock? Are you buying the DE stock? Let us know in the comments. Do you already hold the bag here with John Deere? And do you think that they can actually outpace the overall stock market for the next 5 years? Let us know below.
If you haven't already, subscribe to the channel. Give this video a big old fashioned thumbs up. And what else do we need to tell all those diplomaniacs out there, Lanny?
If she thinks on track to sexy. Guys, you're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.